So the
Sure.
first hedge that I'd love to break down with you, because it seems to be top of mind, is the inflation hedge. I have some charts I'm going to show. So for podcast listeners, make sure you head over to the YouTube channel to look at some of these charts, or even better, download the white paper by visiting YCharts.com. Walk us through how you constructed this potential inflation hedge.
Yeah, so we looked at 3 historical periods in which inflation rose considerably. And the most recent one of those is over this past year, 2020 and 2021, where, inflation is now above 7%, certainly top of mind for everyone. And so we started with a 60-40 equity and fixed income portfolio. That's the original portfolio in the top line of this table. And we looked at its max drawdown over the period. And we also looked at the average standard deviation throughout that time frame. And then with a 5, 10, and 15% allocation to these different ETFs, and also, we couldn't leave Bitcoin out of the conversation here. So we wanted to see how they affected these risk metrics. And as you see, Bitcoin really did not help the portfolio in terms of drawdown and standard deviation. And really, the best of the bunch here was that short-term treasury bond. You hear about commodities and you hear about treasury inflation protected securities tips, and they both did help, but not as much as that SHY ETF.
So for podcast listeners, the 3 ETFs in this graph are SHY, the iShares 1 to 3 year, TIP, the iShares Tips ETF, and then the Invesco DB Commodity Tracking ETF that I know is very popular, symbol DBC.